The Intelligent Investor, Benjamin Graham and Warren Buffett, uh, hands down the best investing book ever written. It was written by Benjamin Graham, who then Warren Buffett learned from him and became the greatest investor of all time. So let's get to it. Let's figure out how to make some serious money. Link will be in the description, guys. If you're interested in finance, investing, highly recommend you read it. It is a little bit complex, but it's good to expose your brain to the very complex. So then, read it once, you might not understand it. Then you start looking up other financial stuff and you start to connect the dots more. So let's get to it. When a big company hiccups, that's when to invest. So for example, the Chipotle E. coli outbreak, great time to invest because that means its stock is undervalued. So that, of course, his big thing is value investing. If a company is worth $1 and it sells for 40 cents, then buy it. Of course, you have to look at the books before you invest, and you have to look at some other numbers and things, but that's the big thing, value investing. The company is worth selling for 40 cents, but its books are saying it's worth $1. That's a great investment. So one metric, no price to earnings ratio above 25. So price to earnings ratio simply means if the earnings ratio is 25, that means for every $25 you invest, you can expect to make $1. So that's 1 out of 25. That's a 4% return. That's not too great. So the lower your price to earnings, the higher your return is. But you got to watch. You don't want it to be too low, like below 10 or 15, because then you're getting into growth stocks. So they're not actually value stocks. They can be good investments, but it's most likely not value investing. Long-term dividends. That's a great sign of a very strong company. So always look for these dividends, and you get stocks that pay out high dividends, keep them and keep reinvesting the dividends, because dividends, what they do, companies pay you to hold their stock. So every quarter, every 3 months, they'll pay you a percentage, usually around like a good dividend stock is like 3 to 6 or 7%. Anything more than that is getting a little risky. Company might be in distress. So look for strong dividends and a history of paying for a long time and increasing the dividends. That's a sign of a very healthy company, very healthy books. There's no good or bad stocks. This is how value investing works. There's no good or bad stocks, just cheap and expensive stocks. So just look out for that. Really evaluate the price to book ratio. So if it's selling for 40 cents, it's worth $1. It's a good buy. And investing is about character rather than IQ. Absolutely love this. This is what really got me excited about investing, because I was like, I don't know, I'm not an investment banker. I didn't graduate with a finance degree or accounting degree, but it's not about IQ. It's about character. Because there's this guy, Mr. Market, goes up and down, which is, the market will go up and down, plays with your emotions. Doesn't matter about IQ, it matters about your character. Can you hold when it's going down, and can you even buy more when it's going down? And have the guts to hold it for long periods of time through ups and downs. Benjamin Graham's 3 laws. Number 1, you must thoroughly analyze the company and the soundness of its underlying business before you buy. Number 2, you must deliberately protect yourself against serious losses. Number 3, you must aspire for adequate, not extraordinary performance. So always aspire for, a good 6 to 8%, and it should keep on going up. If you're trying to chase the home runs, you could very much strike out. So just know that. And investors have a known return. Speculators have an unknown return, a hopeful return. They're pretty much gambling. So investors, they don't see it as they're taking risk at all, because they're analyzing the books thoroughly. They're protecting themselves against losses, and they're aspiring for adequate returns, which means they're not really taking a risk. They're just growing their money. That's what they do. So guys, for more formulas, how to analyze companies, get more financial IQ up, get The Intelligent Investor. It's in the comments below. Greatest book on investing ever written. It made Warren Buffett, $80-90 billion over his lifetime. Incredible. So keep on coming. Keep on watching these videos. Got 150 books per year that I'm going to summarize. That's incredible knowledge, guys. A lot of value. Like it, subscribe to this channel, tell everybody you can about it, and keep learning, keep growing. Have a good
So
one.
lifelong learning and reading books is just one part of Sticky Habits University and Discipline 101. Imagine kicking all your bad habits to the curb, and imagine how successful you'd feel after implementing 10 new healthy habits. After enrolling in Discipline 101, my new course, that's how you'll feel every single day. Living like this changed my life. Go check it out.